Whenever a president speaks, the stock market holds its breath. And lately, it feels like a single statement can send entire industries into a tailspin or to the moon. It really makes you wonder.
I mean, how is that even possible? A tweet? A threat? Some new policy idea? And boom, billions of dollars just appear or vanish. It's not just random noise, you guys. It is a powerful, powerful market force. So today, we're going to dig into 4 huge headlines. We're talking about everything from what's on your dinner plate to the global oil supply. Our goal? To find the real winners and losers that are kind of hiding behind that initial market shock.
Okay, first up is something that literally affects every single one of us: food. The federal government just put out some new dietary recommendations, and honestly, they are a massive change from what we're used to.
And when I say massive, I mean it. Check this out. The recommended daily sugar limit, it's been slashed by 80%, from 50 grams down to just 10. Now, to put that into perspective for you, one single bowl of Honey Nut Cheerios has 12 grams of sugar. So you're already over the new daily limit before you've even had your coffee. It's wild.
And it's not just about cutting sugar. These new guidelines are basically taking the old food pyramid and flipping it completely upside down. There are huge warnings on processed foods, and they want us eating way more protein, like almost double the old recommendation. The focus is shifting hard towards meat, dairy, and vegetables.
So if you're an investor, what does all this mean? Well, companies like Tyson and Hormel, the big meat producers, they could get a major boost from this. But on the flip side, the giants of the processed food world, think Kraft Heinz, Pepsi, Coca-Cola, they could be facing some serious headwinds.
So, government policy can totally shake up an industry like food, right? But what about when a country's main industry has pretty much collapsed? That brings us to our second headline: Venezuela. You hear all this talk about its huge oil reserves being this massive opportunity, but the reality? Oh, it's way more complicated.
Get this. Despite sitting on what are supposedly the world's largest oil reserves, decades of, let's just say, mismanagement mean that Venezuela now produces only about 1% of the world's oil. The whole infrastructure it's in shambles.
And this chart right here just says it all. If you look back to the year 2000, the U.S. was importing over 1 million barrels of oil a day from Venezuela. And today, it's basically zero. That entire gap has been filled by our neighbors, Canada and Mexico.
So you might be asking, why aren't the big dogs like Exxon rushing in to fix it? Well, first, it would cost billions just to get the existing oil fields working again. Second, the political situation is still super risky. And third, with oil prices hanging out around $57 a barrel, it's just not profitable enough to take that kind of gamble.
So the real play here, the real opportunity, isn't actually with the big oil drillers. No, it's with the companies that would get hired to do all the work. The equipment and service firms. We're talking Halliburton, Schlumberger, Baker Hughes. They're the ones who get paid to upgrade everything, no matter who ends up owning the oil. That's the key. Just like the real story in Venezuela wasn't about the drillers, the big story in the housing market isn't always what you see in the headline. Let's take this recent threat from President Trump, a potential ban on big investment firms buying up single-family homes. The market's immediate reaction was, well, not good. It was a classic knee-jerk panic. Invitation Homes, which is the country's biggest renter of single-family homes, saw its stock tank by 12%. American Homes for Rent dropped over 7%. That one headline created instant losers.
But here's the twist. The ban itself, it might not even be legal. The real story, according to the analysis we looked at, is that the threat alone puts enormous political pressure on the Federal Reserve. With an election coming up, the government needs to look like it's doing something about housing costs, and that puts the Fed right in the hot seat.
And what does that pressure lead to? It would likely lead to something called quantitative easing, or QE. Basically, it means the Fed would start buying up tons and tons of mortgage bonds. The whole point is to push mortgage rates down, making it cheaper for people to buy houses, which in turn could pump a whole lot of money back into the economy.
All right, finally, let's talk about the defense sector. This one's a wild ride because it got hit with a case of incredible whiplash, all thanks to 2 totally contradictory headlines that came out just one day apart.
This is just crazy. Okay, so on day one, there's a threat to ban stock buybacks. That's when a company buys its own shares to make them more valuable. That news sends defense stocks tumbling down 5%. Then, the very next day, a proposal for a massive $1.5 trillion defense budget drops, and those same stocks shoot up 10%.
That's a 15% swing in just 2 days, all because of headlines.
Now look, a budget that big probably isn't going to pass as is, but the message is crystal clear. Defense spending is a huge priority. And the big three, RTX, Lockheed Martin, and Northrop Grumman, are all sitting in a great spot to benefit. RTX Corporation, which used to be Raytheon, is definitely one to watch, with its focus on really cutting-edge stuff like anti-missile systems and drone tech.
Okay, so we've looked at food, oil, housing, and defense. 4 totally different industries, but there's one common thread tying them all together. So what's the big lesson here for us as investors? It's this. The first headline, that initial shockwave, it almost never tells the whole story. The real opportunity comes from looking past that knee-jerk reaction. It's about realizing the real winners in an oil play are the service companies, or that a threat to housing investors is really about putting pressure on the Fed.
Which really just leaves us with one final question to think about. When news breaks and the markets go crazy in a split second, is the winning move to react as fast as you can? Or is it to take a breath, think slowly, and find the real story hiding behind the story?